Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And I'm putting this out early at 5:35 p.m. Central Time, as I already know I want to see what the Fed's going to say. Today is April 19th, 2024. And let me tell you where I'm coming from. Is the Fed going to stay with 3 rate cuts, go down to 2? I doubt they're going to go up to 4 in this. I expect Fed Chair Powell will hold the line just as he did in the last meeting, saying that they are data dependent. Members thought there could be a bump or two along the way. And we got that in January and February. He might get asked questions about the dot plot, as this is where you get them. You get dot plots 4 times a year. And on those plots, what takes place is 19 members vote anonymously and put down where they think interest rates will be each period that there's a meeting. So it gives you an idea where you're at. Are we going to see less or more? Does the market care? Let's talk about that for a minute. Probably not. As you saw in the rally today in the S&P and the Dow, the market absorbs everything you throw at it on the downside. We see that there's been rotation out of the meg caps, the tech stocks especially. We even saw NVIDIA started the day out lower, went back up. Okay, we're seeing that Bitcoin has had a heck of a correction. This was a $74,000 plus market just recently. So now it's down to $63,000. Do traders care? They look at all these breaks as buying opportunities. They'll say, so what if it goes to 50? Eventually, it's going to 150,000. There's only going to be 21 million of these coins around. They're very valuable, blah, blah, blah. On the energy markets, I continue to look for opportunities to get long futures for the gasoline. Now, I don't know if I want the May contract or the June. I'm looking at that real hard right now. Option strategies, I've told you already. I like you to be into the summer months. I think that that's the place to be. In the metal markets, it's sort of back and forth action right now, and you'd expect that. Traders are waiting for the event, and after the event's out of the way, voila, it's gone. Now, when you have a Fed meeting, if there's a surprise, you get to see it show up overnight. Think about this. We get the 1 o'clock statement, that's Central Daylight Time. What time is that in Europe? People have left offices. What time is it in Asia? They're asleep. They wake up, they look at what goes on, they react to it their way. It moves to Europe, they react to it. And by the time I'm recording 5 in the morning, and that's when I put out my subscriber video, we see if the reaction stayed as it was in the US or if there's something more radical that has taken place with it. Markets overnight like to think things out, and I think that makes all the sense. But I want to go on record. I don't think the Fed's going to make a big change to things. The flip of the coin is, do they say they're going to do 2 cuts or 3 cuts? That's my point of view on it. And there may be no cuts, but I don't think they would put down on the dot plot no cuts. It could happen, but I don't think that's it. They always leave themselves leeway if the market does certain things. And always look to see if there's going to be questions about the balance sheet runoff. That could be very important as well. So when we look at the S&P, you're at new highs on a closing basis. All right, this is it. You're at all-time highs. Many traders, as I had told you, had picked for the end of the year to be at 52,000. Here you are on a close right now at 52.39. Okay. You can see that you're still stuck in this sideways action. I think I labeled that properly, that there was consolidation, but which way is it going to come out? The report tomorrow gives us an idea. Going into it, the lead is with the bulls. You have the pattern of higher lows, all right? Now the question is, can you bust through these highs? That is really going to be the question of the day. Where's the market fighting and had fought its battle? You take a look at that 18-day average. I've just completed my full charting course. It's done. We are now compiling it. It'll be on our website soon. It'll be available to the public very, very shortly. And I really go through and teach my techniques, the swing lines, how to work with that, the window envelopes, Bollinger Bands, where that's all at. I haven't done this course in almost a decade. So I think it's my 5th reiteration in probably 30 years, 40 years. So it's a long one. And I think it did the best I've done in all of them, because I was able to condense what I do and I point you to certain ways to go about the course. Higher lows, higher highs. Here's your resistance, 52.63. So about 24 points higher. Is there any magic? Can you go over the band? Of course you can. But typically, as you can see, historically, the market has trouble at that upper band and backs away. It doesn't mean that the trajectory isn't there, and it doesn't mean it hasn't paid attention to the 18-day average. The problem would be the first time you get to the lower Bollinger Band. It would sort of tell a story that the market has run out of major momentum to the upside, because you haven't done that. I mean, I could carry you all the way back into last year, into 2023, October, November, when we had the last important breaks in the market. In terms of momentum, overbought. So an overbought market approaching some resistance going into the FOMC meeting. I'll let you trade it. I prefer to be on the sidelines as a speculator and spectator, ready to jump into the market. We'll see which way it goes. In terms of the Nasdaq, you can see the battle. You got under the 18-day average. Just yesterday, I said, will it have enough momentum to get down to that Bollinger Band? It doesn't have to. It can fight its battle right here. And frankly, if it gets back over 18,380, you could start the market without taking out today's, not Wednesday, but Tuesday's low. You'd actually put the bull trend back in place, and you could be talking, maybe you get to the upper band, 18,583. If the market fails here and goes down, well, the 18,000 level could be potential support. In the Dow, the market was able to get back over the 18-day average. It has kept the pattern of higher lows and higher highs. Resistance point would be 39,692. And the market is not yet overbought. To be overbought, well, it is overbought right now. It's got a 70 reading. Any reading over 70 is. So it is into the overbought area. The weakest has been the one that's generally the weakest, the Russell 2000. And where did it go? Right to that lower band. What do I teach you here? Generally speaking, the first time you hit an upper and lower band, there's a problem. But let me tell you what I don't like. Here's a market that it got to the lower band here, and now it's getting back to it. It's clearly not the leader of the stock indices. You don't need me to tell you that, I think, but there you go. And again, this is where people are flocking. Why? Because they look at the low PEs and they go, oh, I want to own that because I can't buy anything that's 60 to 1, 30 to 1, 20 to 1. Oh, that's too expensive in PEs. There's a reason those PEs are there, by the way. Higher high, lower low. Okay. So now what do we do in interest rates? Is this going to be a 5%, 4.5%, 5% market again? That's the big question traders are going to ask. And the same thing will be in the 5-year to a degree. Can it get back to the 18-day average? Or does it start hitting and making new lows on the chart? Everything's about the reaction to what the Fed says and the dot plot. That's my attitude on it. In the dollar, it cleared yesterday, the 18-day average in the 100. The pattern has been higher lows, higher highs. You can see yesterday what the market did. Frankly, on this pattern, you don't do a lot of damage unless you take out the low all the way back here. So if this market wants to accelerate, then the 104 area is your resistance again. And again, if you look at the market, you're knocking on the door of getting overbought with a 69.6 slow stochastic reading. The flip-flops the way it is in the euro. Lower highs, lower lows, still pointing down. Resistance now 109.23 to 24, right in this area. It's the combination of the 100-day average in green and the 18. You'd have to take out 109.46.5. Is that what it is? Yeah, 46.5 in order to break the downtrend in the market. In the British pound, we have the Bank of England coming up. So I don't know that all of this matters one way or the other. We had the big rally up. Now the market's pulled back, and it's going to fight, I think, at that 18-day average, trying to figure out what's next. Bitcoin very quietly is putting on a 10% correction in the market. This is a market, just to give you an example, that I'm going to repeat. Traders love to buy the deep breaks in this market. It was just at 74,400. So now the market break low has just been 60, what was it yesterday? 60, which is Tuesday, 62,500. So it's broken about $12,000 in value, right? Okay. Traders are used to that in this market. If it falls further, the Bollinger Band, 56 to 60,000 could be that area. The resistance point now, the $66,000 area. But the trend down, the bias down, momentum down, and not yet oversold. In Brent versus WTI crude, as long as it stays over this, I think you keep the bullishness in the market because the premium stays to the Brent, and that's what seems to be driving prices. Notice how the market's riding the upper Bollinger Band. That's what I call that gorilla glue trade. It's when after 3 days, you just keep hitting that band. You'll be over it, you get under it, back and forth action, still very bullish. The same is happening here in WTI. On gasoline, you're just getting to the point where you're embedding. You can't count today, but you count Tuesday's action. Both numbers over 80. The day before, Monday, both over 80, and the day before, not. It's got to prove tomorrow that it can stay and keep them both there. Then on breaks in the market, the bulls will be probably fairly aggressive in it. Last in the nat gas, I mentioned to you that I am questioning if we aren't forming a major bottom in the market. It's too soon to call it, so don't write me and say, oh, Ira, you were wrong or you were right. But this sideways action after a market has fallen from roughly the 3.25 area to 173 and finding this sideways action, there will be a point at which we already know the big natural gas companies will cut production back and do other things. So you got to pay attention to that. In terms of news, we get the Mortgage Bankers Association at 6. We get the Fed at 1 o'clock, and then shortly afterwards, the press conference kicks in. And this is as good a time as any for you to take advantage of our free offerings. Now, by clicking on the blue, what happens is you open up the shopping cart. And any of the free offers that we have, as you click them, they'll go into your cart. And you can choose as many as you want here. At the bottom, you put in your name, your email address. If you have notes for us, just put them right in there. It's sent, and generally within a business day or so, we get everything to you. You have the free pivot point course, the Arun indicator course in this. You get to have price counts if you've never seen what they look like. Free trials to our charting software, our phone app, both for iOS and the Android. And I built this. I didn't build it. I had a say in it so that we could read it. All right. I find it important. But what I love about it, you can mount it in your car, put it in your phone holder, and you can say, play my quotes. It'll play your quotes for you. So you set up the file you want it, you can do that. And that's a neat way. And you're not distracted looking at a screen. So it's quite cool. How do you get all this? You go to iraepstein.com, free offers, or you can move your cursor right up to the top here and give it a chance that way. I'm Ira. You have yourself a good day. I'll talk to you tomorrow. Whoa, we'll have a lot to talk about tomorrow night. Take care.